Rick, thank you for coming in today
You're
from
welcome.
Palm Beach, making the trek down to Miami.
I did it.
I know it's not one of your most favorite things to do.
It's just hard to find your office, Mike. Other than that, it's okay.
Did you park in valet here?
I did.
All right, good. I can validate your parking for you. So Rick and I have become friends over the last, I'd say, around 10 years now. And, we share notes on a lot of various topics with regards to private and public investments. Rick's a very knowledgeable investor. He has a lot of time invested into looking at a lot of different opportunities, both fund structures, direct investments, co-investments. He's in talks with a lot of investors from the family office space. Also the asset managers, he spends a lot of time with them as well. So today I wanted to have a conversation, more old school finance, right? Not so much of the new edge conversation that we just had. So Rick, what did you think of 2021 from an alternative investment perspective? What did you think of the returns? What did you think of the market action? How do you feel today as we close the end of the year?
I think 2021 was a hard year to lose money. Every risk asset class went up. The only where you were flat was bonds, but that was obvious that rates really couldn't go more negative in the United States. They'd stay flat to going up. Some bonds are negative. The only aspect of the bond market that performed was junk because the spread compression. But we're in my opinion, a complete speculative fever. Carbon credits traded up over 100% in the US, 140% in Europe. It's a brand new market. That's speculation. Rivian, $90 billion for a company that didn't make a car and that has massive electric competition, including the new Mercedes that I'm getting on January 11th, the EQS, which is the most beautiful car I've ever seen and the most luxurious car I've ever seen, and gets 400 miles on a charge. We're in irrational speculation, which has been fomented by zero interest rates for a long period of time, complete abandonment of legitimate loan terms, so money becomes easily accessible, a lot of leverage in the system, very little regulation in the system, and then a whole new currency called Bitcoin, which is actual real money that's used in the system. And people aren't looking at Bitcoin the way I am, and I'm not an expert on Bitcoin by any means, although when it came out, I'm a student of American history. And one of the reasons we have a constitution is because states were issuing their own currencies and other states wouldn't accept them. And the United States was founded on the principle that there would only be one currency, a sovereign currency of the United States of America, and bought up all the currencies of the 13 states that existed before because they were in default. And the whole principle was we'd have one currency and one financial market national, and then regional markets would develop in various aspects of business, but currency would be uniform and consistent. And Bitcoin's undone that. And why people don't see that as an issue is sort of beyond me, but that's another area of speculation. So 2021 to me was the year of my life where it was hardest to lose money, is my answer.
Okay. The hottest to lose money. All right. So at the end of the year, as you're reflecting on this, it sounds like to me that you have some opinions on 2022. What are those opinions?
I think we'll have some inflation. I think we have inflation, maybe 5, 6, even 7%. The apparent inflation in the marketplace that consumers are experiencing is higher than what's registering in the numbers. I'm one of the few people in Palm Beach that actually goes to the supermarket themselves, and I see the price inflation. I went to the store the other day to buy some like travel things like hair gel and shaving cream to take in small amounts that you could take on the plane because of the roof. And it was like $18 for a small amount of hair gel. I was like, it's true, I haven't been in that store in a long time, but $18 was insane.
Everybody's jacking prices.
Everybody's jacking up prices. Hotels in Miami this week are $1,200 for basic rooms at not good places. And I'm seeing the inflation. I think there was a lot of inflation in the system, and price inflation is being exacerbated by the amount of money the government's printing, the stimulus that the government's put into effect, people cashing out of stock positions at ridiculous inflated valuations. I will say, in addition to inflation, that this time period, the COVID time period, say 2 years is approximately where we are now, was the greatest wealth creation time period in history. I would even be willing to say that there was no time period that was even close to this time period in terms of wealth creation ever. We've minted more 500 millionaires and billionaires in the last 2 years than existed before that.
In the US or globally?
Globally. But most of the excess has been US. We did a fairly detailed analysis at our last meeting. If you look at European multiples, tech and non-tech, Asian multiples, tech and non-tech, we're about double in the United States in a very comparative way. I'm not just comparing, the Microsoft multiple to some railroad in Czechoslovakia. Apples to apples comparison, we're about double. And the number of quote unquote unicorn companies that reach $1 billion market capitalization without having income and based on minimal revenue is like 90% US centric and 10% outside of the US. So the excess that the US is having is really a US phenomenon. That's something that people in the marketplace aren't talking about.
Is that because of how much money we printed?
I think it's a lot of reasons, but foreigners do want to put money here. I think the stability of the currency is one thing. The dollar had been appreciating quite nicely until the last few days. But I do think the general consensus is there's more tech ingenuity in the United States than anywhere else. And I think that has pushed money here, but the availability of financial assets is greater in the United States. Other countries, they just don't have the nerve to take a company like Rivian public and say it's worth $90 billion, or Tesla as, multi-trillion-dollar company, or Vital Farms, a company that makes eggs, that's a basic commodity at a $2 billion market cap in a business that can never be that profitable. I just don't think other countries have that kind of speculative fever. But whatever it is, it is.
So
The United States is trading
Talk to me about public versus private. Where do you see 2022? You want to be in private deals, or you want to be in listed public deals?
You know what? It didn't matter in 2021 because everything went up. I told you the hardest year to lose money. If you look at sort of one good indicia of this is college endowments. The larger endowments have moved to a private equity model. The larger endowments had the best performance they've ever had by far. And you have institutions like Washington University in St. Louis, excellent institution, Ivy League quality school, ranked, higher than Cornell, made $6 billion on its investment portfolio this year. I think it was 70% return, 60%.
Any of that from crypto, or?
I don't know. I don't think so. But it was such a phenomenal change in their, the outlook of a university that it's literally changing higher education. Vanderbilt at 50 or 60%, Duke at 50 or 60%. The Ivies were a little bit less because they're not as much, at least this year, we're not as much in private equity. But you've had phenomenal social change that's resulted from these increases in wealth. The most obvious, which is the high-end housing price inflation that we've seen, where houses are being flipped for 10 and 20% more than they're being bought at, which is $10 or $15 million in the Palm Beach area within weeks of being purchased. We never had that. We had house flipping, but we had house flipping in workforce housing or in middle-class housing.
Saying that high-end luxury homes in Palm Beach are being flipped.
They're being flipped.
That's crazy.
And that's not an economic rational decision. That's a result of, in my opinion, the monopoly money phenomena, which is I just took a company public and sold my stock in the IPO. I'm a securities lawyer. That never happened in the 80s, never happened in the 90s. It's only happening now because there's a complete lack of regulation, and private equity is so powerful that they can dictate terms to investment banks that are taking their companies public that are insane. So you have I give you Smile Direct, a company that I'm involved in litigation, so I make that caveat. But you have a company which had a business model, which was suspect, had a lot of competition, was being sued in a lot of jurisdictions over the business model, rightly or wrongly. A lot of hair around that company that goes public, not making any money, growing revenue, but not making any money, at a $9 billion market cap. And the insiders sell stock in the IPO. They become billionaires instantly. The stock is now down 90%. That doesn't matter to them. Why should that matter to them? They've sold their stock, not all of it, but a large portion of it. They're independently wealthy based upon an idea that didn't work. That's the fault of Wall Street.
So private or public securities?
As I
Private
said,
deals or public
I don't think it matters.
Which one makes you feel more comfortable at night going forward?
I'm not an institution, so I like liquidity because I don't have infinite, money. I don't have money coming in every year like CalPERS. I like some liquidity because I may need something, or I may want to buy something. I may want to buy another asset, a second home, whatever. So I like some liquidity. Also, for individuals investing in capital call based instruments, it's difficult because if you have 30 investments, you don't know when the capital calls are going to be. You can't time that effectively. If you don't have a big line of credit, it's hard to do that. You have to commit capital and hold capital in reserve without the expectation of getting new distributions to reinvest. On the private markets, honestly, I think it's a Ponzi scheme. You have companies that are buying other companies at multiples to revenue that no one ever thought were possible in a textbook. I went to business school. No one ever mentioned buying companies at 10, 20, 30 times revenue, ever. It wasn't even a contemplated subject matter to philosophize about. Companies were priced on earnings or likely earnings. Today, we know that a lot of these companies have bad business models that are never going to make earnings, and they're constantly refinancing or issuing additional equity to stay afloat. I own SoFi. FinTech darling. Can't think of maybe Robinhood for a few weeks was the bigger FinTech darling, but SoFi's been around basically a decade. I probably invested 6 years ago, did a convertible preferred. I saw it as a riskless trade because I was getting 8.5% pref, and I bought in $1 billion market cap. I could be wrong. The company might not make it. Worst that happens, I got 8.5%. I was Warren Buffett for one day. During that time,
shot up to what, $34?
hold on. During the time period that I owned it, they lost more than $1 billion. They're not curing cancer. They're not fixing your hair. They're not fixing your knee. What else is wrong with Mike? They're a bank, okay? Banks borrow low and then lend and have a spread. You ever hear about that?
Yeah.
They issue credit cards and get lots of fees. They do mortgages, get fees, sell off the mortgages. It's a good business because you can borrow really cheap. Still lost $1 billion. So when they went SPAC, if you had looked at my percentage of the company, I bought it in $1 billion market cap. The market cap of the company at the time of the SPAC was $16 billion. I should have had $16 million in equity value. And I said that. I said, I think I have $16 million in equity value. Turned out I had $2.8 million in equity value. You know why? Because every single bill that SoFi had from the day that they issued my stock to the day they went public was paid with equity. As I said to the woman on the phone, I said, I got diluted more than I can even, I'm so diluted, I'm diluted. I actually thought that I had real value here. I said, so you've been paying the taxi cabs with stock. And she laughed, but that's what was happening. So you have hundreds, and I don't mean, I'm using the number correctly, hundreds of companies that have business models with giant negative margins that may or may not ever earn. I mean, SoFi went up and came back down. They had a bigger loss last quarter than people anticipated. Obviously, I made money on the company, so I'm not unhappy. But you have lots of these negative margin businesses that are constantly refinancing by doing secondaries or by borrowing money from any number of private and public sources. And the question is, when does it stop? When does the Fed say we're gonna impose tighter lending standards? When do lenders say we're gonna? They don't care until the day they have to get their money back. And if that day is propelled into the future indefinitely because rates are zero for the next 15 years, and there's infinite liquidity, and there's $10 trillion of crypto on top of the already existing money supply, then it doesn't matter. But someday it will matter. You'll definitely be alive when it matters. I hope I will be. And that's the thing. Everybody is super bullish because they believe that they will be
So
pushed
you
off
don't think
indefinitely.
that's gonna happen this year in 2020?
I doubt that it will happen this year unless China does something that we don't anticipate, invades Taiwan, and that causes a worldwide trade war.
Something's gonna.
COVID becomes bigger and
rears its
worse.
head back,
then-
something.
I mean,
It's gonna be a big major trigger then.
that stops trade cold for a longer period of time than COVID. Because the government, so we spent 7 trillion on this tranche of COVID. If something comes in worse than COVID, there isn't 15 trillion to spend. So at some point, there'll be a contraction if that happens. But if that doesn't happen, the Biden administration, the Fed seem willing to finance this indefinitely. Indefinitely. What does indefinitely mean? I don't know what it means. I ask everybody I see, including taxi cab drivers, when will it end? And no one, A, wants to answer that question, or B, cares. Because the anticipation of all investors is, I'll be out before it ends, because I'll see it.
It's impossible to see.
It's-
Everybody thinks they can see it, because they saw the last one in hindsight, but did you see COVID happening?
Of course not.
Nobody.
And I was in China when COVID broke.
Yeah, I remember.
Everybody was wearing a mask. It wasn't because of COVID, it was because of pollution.
You were teaching, right?
Right, exactly.
Teaching securities law in China.
Correct. At the School of Marxism, to be specific. So I think we're,
So they're learning securities law at the school.
oh, they're very interested in it was School of Marxism, they're very interested in capitalist markets.
We'll talk about China tech. What's the deal with?
I'm not an expert on China tech.
No?
No.
Any opinions
No.
following that, like Didi situation and how, like, the Chinese government has been? Any
I
thoughts?
have the sense, and I do have some relationships in China, that the Chinese are pulling back from their international profile, that they're more interested in generating domestic services and growth, and that Xi is seeking a much more powerful and long-term role, that eventually they will either consensually or not take back Taiwan, which I think is a long-term process, but I think they will do that.
Yeah, we're gonna let them take.
Yes, we will definitely not wage a long-term war over Taiwan, in my opinion.
So we're gonna go back on our promises.
I don't think it's going back on our promises. We've armed them. We've given them advanced military technology, given them missiles, we've given them radar, we've given them planes, we've given them training. We have people there training them now. That's very different than our,
Yeah, but isn't it
than
part of
than our
Constitution that we have to
committing.
protect them?
What's that?
Isn't it part of our Constitution that we have to protect?
It's
them?
not part of the Constitution. There's a treaty that I'm not an expert on either, that implies that we would come to their defense, but I don't see that happening.
It's always on the search for one of these major macro events that's gonna derail, global financial markets, basically. And COVID was one of those, like, real game-changing events that really stopped global commerce.
But when you think about it, COVID was the best disease ever. What happened during COVID? You got richer. We minted 1,500 new billionaires. We minted thousands of new 500 millionaires. People who you never thought would make more than $5 made hundreds of millions or billions. Some of the people I've talked about in the beginning of. So everybody talks about COVID as if it was this, and it's unfortunate that a lot of people died and a lot of people suffered and didn't die. I got COVID and I didn't have a good time. But the net economic impact was a huge amount of money being pushed into the marketplace and rates staying lower for longer. Now, you can do that on COVID one, but on the next one, how much lower and how much longer? And so now we're seeing one of the consequences of that, of course, is potential inflation. Look at the Vietnam War. And we're seeing that supply chain bottlenecks lead to inflation. When I want to buy furniture, you know what they say to me? There's no discounts on the furniture. This is Miami. I said, don't I get a 10% discount buying this? They said, you're lucky we're selling this to you. We only have one set. Like, if you don't want to buy it now, you can get it next summer. Okay. So the sellers are in the position of power because of supply chain.
And that's
So-
the first time in a long time, right?
Yes, we had, I mean, the great thing about China for Americans is they produce cheap goods. The great thing about Vietnam is they produce cheap goods. The great thing about India is they produce cheap goods, but the goods aren't getting here anymore. I'm not saying it's tragic or terrible. It's certainly not, but I've waited a year to get a car that was committed to a year ago. I'm assuming I'm going to get it on the next commitment date, but my concern is when we're, as lawyers, when you do a case and things go wrong and there's fraud and you have fancy people on the board and you have fancy New York City law firms that pay $1,200 an hour, the expression we use is, where were the adults? That's the expression we use. Having children, you know what I mean. And my position today is, where are the adults? I run an investment group with 35 families. Everybody's bullish. Even more bullish now than they were 8 months ago. And when you say to them, Rivian, buy now, pay later. I think if I came to you with buy now, pay later before COVID, and you were a business school professor at Miami, and I said, this is my business idea. I'm going to sell sweaters on a buy now, pay later basis, and socks and cheap ties like this. And
Hey, this is an expensive.
okay, I mean, that's it's too much for buy now, pay later. And the people are going to commit to pay me over 24 months, $39. I would say you need to go back to business school, because those are uncollectible loans, and you know that, and they're too small to even think about trying to commence litigation or even a collection. So anybody who doesn't want to pay you doesn't pay you. And your response is going to be, well, then they won't get our loan anymore. And I'll say, yes, they won't get your loan anymore. And they'll go back to buying their sweaters at Kmart. But they'll get a long period of time where they can buy goods from you and not pay them off. Or we'll have a recession and they won't be able to pay them off. I mean, what is that? And the thing is, when I watch CNBC, which I don't really like.
By the way, Jeremy thinks that business model is a good one.
I know. He also thinks that sneakers are a financial market. I know. And fractional art, which is the single most, if you look at the history of fractional art, it's a history of fraud. Okay. You can't securitize fractional art. You can't securitize your interest in the fractional art. Guess what? The bad thing about art is it moves. Okay. It's not like a security, which has got an ID number and is held at DTC. We know where those are. The art can be in your house or my house or gone. How do you secure your interest in that? Well, the person who sold it to you is reliable, but the person who sold it to you isn't reliable. There's a history of monstrous fraud in the art market. Half of the art on the internet is fake under most people's, survey view. Okay. Right now, I can buy you 50 Matisses on one website. Okay. It's not possible. So no, I don't think securitizing or selling pieces of art is a legitimate business model for people to invest in any serious amount of assets. Liquor, I heard somebody talk about liquor. There's another business. The best businessmen I know are the Cokes. Okay, they took a small business that they brought the game and grew it into an international conglomerate. They got ripped off in liquor because, is the liquor stored correctly? Was it always at the right temperature from 1800 forward? How do you know? I have 2 wine cellars. Guess what? You lose power in Palm Beach all the time. And then we have this bad thing called hurricanes. You lose power for a week. Yeah, you can ship yourself out, but they close the island and you can't get back on the island. So lots of wine that isn't obviously cooked is the term, okay? The corks didn't pop, is bad wine. You just don't know that. So that's these markets where you don't have fungible, storable, easily demonstrable ownership interests are not good for financialization. Just for the record, I did invest in the very first rare furniture fund, where we went around buying at auction, okay, kind of what Doyle Galleries does in New York City, the best collections of furniture in Europe. And the business completely fell apart because we had a recession in the middle. Storing furniture is expensive. Insuring furniture is expensive. You know why? Because they know it moves too. So these are not business models that are well thought out, in my opinion. And I think if people rationally looked at them and said, pre-COVID, would I do this? No, no. And so when you add up all of the excess in the market, the electronic vehicle excess, maybe it's 1.5 trillion. The buy now, pay later excess, a trillion. The bad business, just general bad business model companies that went public that are never going to make money and that are going to disappear. And you're starting to see them now. I mean, SoFi is down 25% in the last 10 trading days, 5 trillion. So I see about 10 trillion of excess in the US market, because I said it's 90% US, of companies that will never make money, which leads me to the best profession for the next market cycle, bankruptcy lawyer.
It's coming back.
You
Bankruptcy?
need to retool to be a bankruptcy lawyer.
So bankruptcy is coming back.
Yes.
Not workouts anymore.
I think these are going to be traditional bankruptcies because there's nothing there. As they like to say, there's no there. Traditional bankruptcies work when you're asset heavy and you have a cash flow problem. And when you can borrow money, okay?
When was the last time we went through a really good bankruptcy like cycle? Was it 08?
We had a lot of good bankruptcies, as you like to
In
call
08?
it, in a way. Absolutely.
But they still bailed out like the automobile industry. That thing would have been another train wreck.
I want to live
When was
long
the
enough
last
to be
time
bailed
in
down.
in your like career that you saw
The-
a
the-
real like let's clear the deck, like
It's not like that. It's that industries come out of favor or technology changes and your business didn't keep up and you become insolvent. I mean, the biggest bankruptcy in history is Lehman Brothers. They were over leveraged. They were in diverse markets that weren't performing. They didn't realize everything's correlated on the downside. They were 7 to 12 times levered. You have the largest bankruptcy in history. So I don't think it is somewhat cyclical, but it's also somewhat industry laden. I think fintech companies, a lot of them will fail. Buy now, pay later, I think a lot of them will fail, which is a fintech in a sense. There will be winners in the electric market, but there will be losers in the electric market.
Has your club been doing any cannabis deals or psychedelic deals or any of that stuff?
We did many cannabis deals, but only on the debt side. So because it's not bankable, we became the bank. And so I just considered another form of middle market lending. We got way above market rates for our loans because JP Morgan won't loan to pot growers.
So was it loans on real estate or was it?
It was loans on real estate.
loans
We've
on-
had no defaults, not even close.
Good business still going forward?
You went from 16% to 13% to 9% now. So yeah, still good, but not what it was. But if you have an IRA and you can get 9% tax deferred, I think that's an excellent
How
return.
about psychedelic stuff? Have you seen?
We haven't done it. We have a psychiatrist in our group who's actually a psychopharmacologist, and he said the market just isn't ready for that.
So it's too nascent. of a
Right.
Space. It's interesting. So with the crypto stuff, are there any Amazons? Are there any Facebook?
I'm
groups?
I'm not expert
Twitter.
enough on crypto to have an opinion. My only sort of macro take on it was because my son is taking AP history in 11th grade and I do his homework for him. And so when I was reading his course book, which by the way, has nothing about the American Revolution, only about social policy now. It had a long chapter about the financial impetus to start a union where the states were printing money on their own and couldn't back up the money. And it made me think, we basically, without that, we wouldn't have the United States of America. We'd have separate states with separate banking systems and separate currencies. And that's called the European Union and before they got the euro. But that was a fundamental economic conclusion that Hamilton drew, that we had to have one currency that the United States government stood behind. And that's been the greatest boon for the United States because everyone believes the US dollar is the strongest currency and there'll never be a default and they can issue as much money as they want and the United States will be sovereign. You can't say that about Turkey, right? You can't say that about countries which expropriate property like Argentina, but you can say that about the United States. And that was Hamilton's genius. And now we're saying anybody can set up a competing quote unquote currency. And I mean anybody. That's the other thing that I don't understand about crypto. Anybody can do that. Are we going to have 50 cryptocurrencies, 100, 1,000? Is every kid from Harvard going to set up his own cryptocurrency?
There already is thousands of cryptocurrencies.
Right. So, I mean, how many of these competing currencies are we going to have to actual currencies backed by governments?
What do you think of some of these like altcoins?
Again,
You know,
just
like
not expert enough. I
these,
just have a
like,
macro
Shiba
understanding.
Inu, Dogecoin.
My wife wanted to get one of those Shiba Inu dogs.
Uh,
We actually got one. It was like a runaway, but it was chipped, so we had to give it back. But I could see why they like them.
and Elon Musk.
Genius.
Genius
Greatest genius of our generation by far.
by far.
By far.
Tesla.
Genius, but face the reality that there's going to be intense competition at a serious level. Me, I think Teslas are ugly. You might think they're beautiful. I think the Mercedes is gorgeous. I think the interiors of Teslas are Spartan. I think the interior of a Mercedes is lovely, and I know how to drive that car. I've had 4 of them, and there's 4 service organizations with lots of people who'll give you a rental car and this and that and call you within 50 miles of my house. Where's the Tesla dealer? There's one in the whole West Palm Beach corridor. So I'm not saying the Mercedes and the Audi will replace Tesla, but they're very viable
Do
competition.
you think Elon Musk owes us?
No,
You don't think he owes
I don't
us?
think he owes us. It's, you'd like to think that people who are already rich would act more rationally than people who were poor and would do anything for money. That's sort of my big, like, I think I act more rationally because I don't need an extra dollar, so I'm not going to cheat somebody or just not going to step over the line for that because I don't need it. But what I see is people who are already rich, still so desirous of the accolades of being even richer, are still willing to step over the line. That's where are the adults in the room I talked about? That's shocking to me. It is, because when I got wealthy enough to feel that I didn't have to work every day, I went to teach in a high school every Friday. My Fridays were teaching at Palm Beach Lakes High School. And you got guys that are 1,000 times richer than me that want to make more money by, non-conventional means. And there's got to be something better for them to do that will keep them happy and improve society at the same time.
Then pump Dogecoin.
And pump Dogecoin, or that come up with fake ESG companies. Do you want to talk about ESG?
Let's talk about ESG. I mean, it started out as a good idea, right? And today it seems to be more of a
ESG
market.
is a fabulous idea. My wife is one of the leading environmental lawyers in Florida. We've taken a case to the Florida Supreme Court 4 times. It started out with respect to people driving on the beach in Daytona and killing endangered species turtles, caretta being the Latin term for that species. And we fought that and never made a penny. I probably invested $1 million in that case. We had expert witnesses, we had computer time, we had Westlaw databases, we had actual legal time that other people get paid for. And it was fought aggressively by a large law firm in Orlando. We've done other similar cases. We've done anti-development cases. And we did all that on our own nickel. We didn't have a litigation finance people behind us because we thought that was important to do. So yeah, I'm a great believer in environmental causes and social causes and governance causes, but it has become a nomenclature for people to raise money and nothing more. I brought what I think is the first ESG fraud litigation. It was written up in the New York Times and then in other places against a manufacturer of eggs. Obviously, they had the defenses. I'm telling my point of view only, where they said that our production methods are humane and ethical. Now, Mike, you probably don't know a lot about farming because you grew up in Miami, and then nearest farm is Opelika, which is like 150 miles, and there's actually nothing natural in the whole environment.
What is it called?
But you do buy eggs.
What is it called? Maceration? What is it?
Oh, I'm going to come back to that. But you do buy eggs.
I do buy eggs.
And I asked you once, and you said your wife buys the 750 eggs because they say humane and ethical. Right. So
a dozen.
assume those eggs are not very different than the 99-cent eggs.
Vital Farm?
Vital Farms, right?
Okay.
And again, my perspective only, there is no part of agriculture that I have seen that's humane and ethical, okay? War is not humane and ethical. You can't say, we're involved in a humane and ethical war, and therefore we want you to support it, because it's just not. You can say it is, but it's not. Agriculture involves killing animals, okay? It involves killing them before their natural lifespan expires. It involves keeping them typically in some kind of confined quarters. It involves feeding them non-natural foods at a larger intake so that they can get bigger and fatter and more meaty and lay more eggs and all those things, okay? So that's not humane and ethical. You know what's humane and ethical? Running a nice petting farm where they eat whatever they want and you feed them Snickers bars and crackers and they're entertained and they eat fish at the, that could be, but that's not modern agriculture. It's just not. So the notion that you can convince people to pay 7 times the price, that will be 700 grand for my new Mercedes. Even you wouldn't pay that because you could have 2 Bentleys. Okay, 700 grand if I say my Mercedes is humane and ethical, that's a good pitch if you can get away with it. But there isn't an obvious standard to judge ESG by, right? So typically when you start a new theory of economics or philosophy or law, you have a book, a theory. It's Mao's book of communist principles. It's Karl Marx's book on the Communist Manifesto. It's Hitler's book, Mein Kampf. That's their philosophy. They started with the basic, this is what I'm going to do. This is my evil deed. This is how I'm going to do it. Where's the book of ESG? You think ESG is something, I think it's something completely different. And how ESG do you have to be ESG? Okay, is changing one aspect of your oil business to make it slightly less polluting, make you ESG? Or does it make you an extremely bad polluter who's trying to get credit for not being a bad polluter?
All right, so let's go.
So
down that road.
absent standards, and you can blame regulators for this, although regulators are looking at it. They want to have a better standard for ESG. They want to make sure people carefully use ESG. But again, without clear standards, second step is that how can you have clear standards? You have 300 industry groups, okay? You have 300 CID numbers for companies that register with the SEC. Each of them has a different element of their business that might be non-ESG that they might reform to become ESG. So do you need 300 sets of standards? Is ESG in the oil business anything at all like ESG in the chair manufacturing business?
Let's talk about ESG in the portfolio management business. So you can short a stock and get credit for ESG if it's a coal company.
Insanity.
Yeah.
Insanity. Let me tell you something. Oil was once considered extremely ESG. Did you know that?
You short
Well, sorry, did you know that oil was considered the most ESG business in the world? You know why? What preceded oil as a form of lighting your house in the United States, Mr. Rhode Island?
I would say, what's that stuff called? It's liquid.
That stuff is called whale oil. Okay, that's what it's called, whale oil. Okay, whale oil is toxic when it burns. It burns at a very high rate. Thousands of houses burn down, and guess what? You got to kill whales to get it. Pretty not ESG. So when oil came around, it was in the freaking ground, just sitting there for, I don't know, either 1 million or 1 billion years, depending if you're Jewish or Catholic. Okay, so that was pretty ESG because you stopped killing the whales just to light up your house at night so that you didn't walk into things. Now it's not ESG because we have wind power and some nuclear power and water power and maybe fusion and maybe biodiesel, okay? But yes, that's all true. And I'm a believer in global warming and probably carbon does result in that. I could be right or wrong, but I believe that now based on the science. And I'm not saying that we shouldn't limit that, okay? But you have to have a standard and a mechanism. How about this? We get rid of all oil. There's a TV show on. It's about, I forgot the name of it. It's on Netflix. And it's about a terrorist group kidnapping someone at a conference in Norway about stopping all oil development. And there's Russian interest and Norwegian and Swedish. And, you know, they make these very bold statements like we have to stop all oil now, or they just found the largest oil deposit off of Greenland. And the Greenland's sort of an independent part of Denmark. And the people in Greenland want to develop it. and the Denmark people don't, but they're going to let them. And they say, well, let's not develop it all. Those are not the decisions that people make. It's not stark like that, okay? So you have to have a very complex system to measure.
There was discussions about buying Greenland a couple of years ago.
I remember your candidate wanted to buy Greenland, and he knew it was going to get warm and he'd be able to turn that into farmland and build another Mar-a-Lago there, and people would go on vacation. I remember that. Yeah.
That was I feel like I'm watching a rerun of the
Yeah.
movie.
But it was a slightly different movie.
How
Mr. Trump
can
wasn't in it.
How can you short a coal company and then pick up credit for being
I mean,
ESG?
I haven't heard so much about shorting. I've heard.
No, this is a real practice.
I mean, I think.
CalPERS,
I think most of them just stop investing. You know, they decarbonize. Let me tell you.
They're getting credit, right? They're getting ESG
Credit from who? Who's the ESG police?
There's a couple of different organizations out there that
Are you the ESG? Yeah, they are. You know who's the? I read the book.
Self-proclaimed.
Exactly. I read one of them is one of the big companies that does proxy material. I won't mention their name. Okay. And another is a very liberal organization, because I did read the book that describes how ESG came about. Those two are very liberal groups and have their own agenda. Okay. So they're not the ESG police. They're the self-appointed ESG police. Why people allow them to be bullied into determining what's ESG and what's not ESG and how far. I mean, some people for a period of time, as oil was going up, in the last 6 or 9 months, think that that's the result of ESG, that oil companies are refusing to develop new reserves, that they're scared about, that it's harder for them to get financing, so it's more expensive.
Well, they're all becoming carbon neutral by 20.
They're not going to become carbon neutral. Come on, by that time period. That's ridiculous.
No, but that's what they're all
I
saying.
know. They're going to try and
If
aspire
you-
to do that.
If you look at it straight across the board, I mean, they're all going green. Everybody's going green nowadays.
And who determines the standard for what's carbon neutral? Is
I mean,
Mike Corcelli carbon neutral?
The whole thing. I mean, if you look at like Peabody Coal, Arch Resources, you start reading their Qs and their Ks. I mean, these companies are becoming, green companies.
I think this is a movement in search of a theory.
If you don't like pretend or do your best to disguise
Well, that's
what
different.
you're actually doing, then, I mean, if you look at Total's, exiting the oil and gas business. I mean, they're going to be 2050 a completely renewable energy company. All right, like
What's surprising to me is that you have such a strong lobby for ESG, and you have such a strong industry reaction, ESG funds, ETFs that are ESG, ESG police, funds that are ESG. And then we're now getting the pushback, which is my litigation and other cases where people say, well, I looked at the stocks in this fund and they're not any more ESG than the stocks in the S&P 500, because there's no system to measure ESG. It's not a ruler. And I'm a rational person. Without a system to measure the standards by which you measure ESG, I don't think you can have ESG rules.
so it's a complete joke.
It's not a complete joke.
It's a good idea, but it's a complete joke in practice.
Are you against Santa Claus? No one's against Santa Claus, okay? But if I say he doesn't exist, that kind of makes me against Santa Claus, doesn't it? Okay, so the reality is I'm in favor. I've spent my hard-earned dollars and time fighting for the environment. Google it, okay? Coretta, you'll find out. But I'm not in favor of false, systematic adoption of standardless behavior.
So somebody once told me that if you really want to change, the world and companies, you do it through proxy voting, right? So if you
I never heard that.
If you make it meaningful at a proxy voting level, then the change becomes evident.
Nothing is meaningful at a proxy voting level because people don't vote.
The institutions vote on.
A handful of institutions vote. And that's why an institution with 3 or 5% can be so effective in getting change at corporations, because that's a substantial vote, because most people don't vote. So no, I don't think proxy is the way to go. Most of the proxy battles have been about people trying to get issues on the vote for the corporation, usually environmental issues or social issues or political issues or racism issues or sexism issues, those kinds of things, not the general corporate structure of the company.
So social or environmental,
Okay.
which one
Let me say this.
basically?
I went to Columbia Law School a long time ago, and we studied this guy called Milton Friedman.
Sure.
And Milton Friedman, to his credit, was the creator of the architecture for the legal system for capitalism. And that legal system for capitalism is reflected in the Delaware Corporate Code and in New York Corporate Code and in other states which have less corporations following incorporated and therefore subject to their code. And that was that. There's a one purpose of a corporation. One purpose. They're not here to make old ladies happy. They're not here to sponsor Christmas pageants. They're not here to name SoFi Stadium. Their goal is to make money. That's it. They're not social animals. Now, making money may also involve being a good community participant, right? Helping out your neighbor because the neighbor will then want to buy your product. Giving money to the local sports teams because they come into your restaurant then, okay? So certainly being a good social participant may be a way to make more money effectively and maybe a perfectly legitimate corporate strategy. And Friedman never said that was wrong. He said that was right. But we've now switched without really changing the legal architecture. The legislature of the state of Delaware didn't meet and say, from now on, that Milton Friedman stuff that we have in our corporate code is out the window. From now on, corporations can do whatever they freaking want as long as they think it's ESG. The closest we've come to that is the so-called B corporation, which is a benefit corporation that Delaware has. And they then have not specific requirements, but general requirements to consider factors other than profit. But it's very mushy stuff, okay? So until the law changes and the legal system says corporations don't have to have profit as their motive, they can take your money, investor Mike Corcelli, and invest in their pet ESG project. You know what? You know what? Let me tell you something. I live on the beach.
Right.
And you know what I think? I think that they should put 50 billion tons of sand on that beach so I can walk into the freaking middle of the Atlantic without touching rocks. Okay? That's what I think is ESG. And I'm going to take your corporate money and I'm going to call it beach expansion. Okay, it sounds good. And I'm going to put a few dolphins in and a few manatees in there. And I'm going to make it as nice as it, really what I'm going to do is enhance the value of my house. Okay? But it sounds pretty ESG, doesn't it?
It does.
So when did corporate executives, guys who are managing your money and getting paid handsomely, become the arbiters of social policy in the US? That's the question you have to ask, because you need to change the legal system to do that. So what's happened in effect is we've had massive social policy change without any legal system change. And that's because Congress can't do anything except fight over a budget and then call each other names. And state legislatures do very little. And the Delaware people don't want corporations to not incorporate there because that's a big source of revenue. So they don't really want to change the code. But we've had massive social change without any legislature manifesting that change. And that change has been forced by institutional investors and private equity. The biggest supporter of ESG is Larry Fink. In fact, if there were an Olympics for ESG, he would be the decathlon champ.
Let's play a quick game. Positive or negative, right? So I'll say hedge funds, you say your outlook for 2022, positive or negative.
Can I add anything more? I have to answer yet positive or negative.
Let's do a fire round, and then we'll come back to the questions. So private equity, positive or negative?
For 2022?
Yeah.
Still positive.
hedge funds?
Depends on the area they're in. Long, short equity, I think is going to have a hard time. There is a rotation into value a little bit, but I still think it's manager selective.
Okay, let's go commercial real estate, but industrial.
A little bit, not much more in there.
Multifamily,
Multifamily in Florida or multifamily nationwide?
nationwide.
I think multifamily in the fast-growing states that have good tax situations, Florida, Texas, strong, continues to be strong.
Hospitality,
Depends on COVID.
office,
I wouldn't be there.
all right, direct lending,
Still areas for direct lending where the loans are too small to be banked, the loans are too odd to be banked, the businesses are too small to be banked, or marijuana, where we just don't have the federal regulation yet to bank it.
private debt,
Same.
same. Commercial versus business on the private debt side.
We see private debt as very sector oriented and very deal oriented. So, as I said, we've done a lot in marijuana and it's waning. I mean, it's still a decent, but you get private debt deals because they ran into a problem. They couldn't get banked. So they're very sui generis or unique. That's a space where I think high net worth investors are a good asset for borrowers because we can turn around things quickly. We don't have to have a committee meeting. We don't have to have approval by the president of the bank. We don't have federal regulation. So I think that's an area where we can act much, much more quickly and solve problems for borrowers.
Okay, S&P 500.
I mean, it's hard.
Positive or negative?
It depends where we end this year, obviously. Personally, I think we'll be flat for the rest of the year. I think people are already out of their positions. I would say the end is not coming next year. Biden's still going to be president. He's going to put a lot of money into the economy for reasons I'm not quite sure about. He wants to be reelected. So I would say we'll be up, but less than 10%.
Okay, oil? Higher or lower, positive, negative?
There's too many factors in that. I mean, oil moves so fast, right? And then came down so fast. It's become so sensitive to the perception of economic growth. And I do think the ESG overlay is important. I mean, the more companies stop exploring for new oil, the more difficult it is going to be able to keep oil at a fair price. And that's another problem with ESG is you can't time this, right? You got a worldwide economy. You can't time when we should phase out of oil and how we should phase out of oil exactly with when we're going to come online with non-carbon based energy sources.
Interest rates, 10-year, higher or lower?
Higher,
Higher. Range,
at least 50 basis points.
at least 50, okay. Precious metals, higher or lower?
Not lower,
Flat to up?
flat to up.
Cryptocurrencies,
No opinion.
regulation of cryptocurrencies,
Certain aspects of the market will be regulated.
if you were the head of the Office of Financial Regulation in Florida, and part of
Well,
your
he has
job-
no power, but yeah, if I were the SEC chairman and the CFTC chairman together,
Yes,
I would never have allowed crypto.
no, but at this stage, I mean, the masses have exposure to it pretty much. Regulate it.
Scaramucci has exposure to it. What more need I
regulate it,
say?
Don't regulate it. What's the deal?
The point of regulation in the United States from the securities level is disclosure. It's not substantive regulation. There is some substantive regulation, but by and large, it's just who owns the positions, okay? How is it trading? What are the commissions? What are you paying? What is margin cost? It's disclosure. So if they regulated crypto and we knew who owned the crypto, it would destroy crypto. because the whole point of crypto is for rich people to hide their money and drug dealers to pay for drugs. So the regulation that makes sense for crypto is the same regulation that makes sense for securities. When you own a big enough percentage of it to affect the market, disclose. When you own a substantial percentage of it, don't sell because that can affect the
So
market.
It's not a currency then. It's a
In my
commodity.
opinion, how can it be, how can it be
Commodity?
how can it be a currency when it can move 10% in a day? Would you accept currency? Would you accept the Turkish lira for all your business? No, you wouldn't.
Well, people are saying that that's because it's pegged to, it's itself. It's not pegged to a currency.
Right, but that's the whole point of it.
So if you can get off of currencies, you would feel less gyrations.
So you want the United
Sure.
States to not, you want all of the United
I'm not
States
saying I
dollars
want
to be
any-
vacuumed up into money heaven.
I'm not saying I want any of this to happen. What I'm trying to get out of you, do you think the US government, Gensler, do you think that we're gonna see regulation come on cryptocurrency? And if it does, what is it gonna look like?
They're going to
Will it be
regulate, they're going to
effective?
regulate trading, okay? I don't think they'll have disclosure of ownership because it will destroy the whole purpose for crypto, in my opinion. And certain types of crypto will be seen as securities. Margin lending on crypto and treating crypto as a bank deposit and paying interest has to be regulated because that's banking.
Have you ever done any staking?
No.
Do you know what staking is?
Yeah.
Don't you find that interesting to actually get paid to let people like borrow your money?
I'm not confident enough in my knowledge of the system to do that.
You could get like 10, 12% staking cryptocurrency, right?
But I'm just worried about finding my cryptocurrency. I can't even get on AOL sometimes.
It's true though.
And think about what you
lose
just
your
said.
phone,
How
lose your
can
money.
that be economically sensible? If I short a stock, unless it's, a real squeeze, okay, unless it's a GameStop, you're not paying that much money to borrow, okay? I will tell you the big area that I think Gensler's interested in regulating is short selling. Because it's a free way for Wall Street firms to make lots of money. It's secretive. We don't know who the big short sellers are. We know who the big longs are. We don't know who the big shorts are, okay? And it's a fact, I'm sorry, that big firms short naked. I own SoFi. It was going public. Everyone knew what price it was going to come public at. And there was a huge amount of pressure on that stock from short sellers. I couldn't borrow the stock. There was nothing to borrow. I asked every day. I asked 10 different brokers. It was 80% annual to borrow the stock. And I watched the stock go down, down, down until I got mine basically in the mail. I was a retail, I filled out these forms and then they're like, oh, we're going to have it credited to your DTC account any day now, Mr. Stone. Huge amount of selling in the stock. That was all naked short selling. So I think Gensler's onto something there. And that's something he could concretely do. Regulate the short market. How much you're getting paid, how much customers are getting paid, who's the big shorts in the market, what's the total short outstanding really?
So I have a question on that side. All right, so you think that short selling should be more disclosed?
Yes,
Similar to long positions?
yes.
Okay. Now, by preventing some of these things from happening, is that another leg up in equities?
I don't understand.
By preventing some of this short selling that's going on?
I'm not sure that it will prevent it. I'm not sure that it will prevent it.
I think it'll
Look,
prevent a lot of
let me,
it'll be similar to September 15th, 2008, right around that time when they enacted some of the no naked short selling rules that were, preventing people from shorting bank stocks. Right?
well, from time to time, they've had limitations on shorting because of their concern about market conditions. That will still be available.
Maybe that's one of the biggest impetus for upward price momentum in public equities this year going forward.
Those are in general temporary stops because of, they closed the stock market also,
But aren't big institutions scared shit of shorting stocks right now because of what happened with Melvin Capital?
they're
and-
scared of shorting retail stocks, yes. And listen, I think shorting is a very important function. Absent shorting, you can have, crazy price movements. Disclosure of who owns the short will help in that system, in my opinion. If I know that a big fund, if I know that Steve Cohen's new entity has a 9% short in XYZ stock, that's going to help me make a financial decision whether I want to get involved in that. And if I see 4 big hedge funds that I know work together collectively have a 12% short in that, that's going to help me make an investment decision.
But why should we even be disclosing their long positions?
Because we made a decision in 1934 that understanding who owns stock and who can affect the management of that stock through stock ownership is an important disclosable fact.
Gotcha. I never looked at it from that perspective before, but I think that's really interesting.
That's not going backward. I mean, the history of disclosure of that's been more and more prompt, 10 days, 5 days, 2 days, contemporaneous. And that's important. I mean, the whole tender offer process in the 60s and 70s, you had to know who was buying your stock so you could deal with them or not deal with them. In general, more information does lead to efficiency. There can be too much information that leads to less efficiency, but disclosing who owns large blocks of your stock or who's shorting, I think makes the market more efficient.
So that's one of the things that we were talking about earlier today with all these different asset classes that are not efficient. I think that there's more room for profit.
Some of them are not efficient because they're not asset classes. Some of them are not efficient because you don't know what you own. Some of them are not efficient because the instrument you're buying is not fungible with other. Every share of IBM is fungible with every other share of IBM. Is every pair of Jordan sneakers fungible with every other pair? It's not, because some have dents in them, some aren't real. And you can't tell that by looking on the internet. Some have worn out, okay? Some have a shoe lift because one leg is shorter than the other, like mine. So they're not fungible instruments. Generally, markets are efficient when the instrument you're trading is fungible.
It's been a great conversation, Rick. Covered a lot of territory. What are your closing comments?
I close with where I started. Where are the adults? I'm still investing. I'm a fairly cautious investor. I have made some outsized returns that I never would have predicted would occur. But the notion that we're in some new era where every idea can manifest itself in a unicorn without revenue and certainly without earnings, I think is laughable. And I think this is a US-centric phenomenon, which is important because, okay, the Europeans may not be as efficient as us. Their market is just as big as ours. They got more people than us. They have a legitimate education system. How can it be that we're 2 or 3 times more valuable for the same income stream than they are? It doesn't make sense. So when you look at it from the macro point of view, something's going on here that they're not believing in. And even the real estate run up here
Are they
is,
putting their money here still though?
yes, because when people see things going up, it tends to generate more people wanting to buy it.
So then we are twice as valuable.
No, that has nothing to do with value. This is to do with cash flows.
But is it because we have growth?
Europe was growing pretty well, okay? Not quite at the United States level, but I'm talking about apples to apples. Take a company that has 20% earnings growth and that 20% earnings growth, and it will be much higher PE here than there. And they just don't have a lot of these no income, small revenue, giant multiple companies in Europe.
You're going to meet a friend of mine tonight, a European, who I would bet my last dollar he was be conservative and completely out of some of these asset classes. And he's in the midst of all of them. He's buying and selling the most crazy stuff.
Yeah, I mean,
He's an older gentleman and he's European. And he is what I think about when I think of risk averse. But guess what? He's here in Florida, he's in Miami, and he's buying and selling all this crazy stuff that we're talking about.
That doesn't shock me because the people in my group were pre-COVID sophisticated conservative investors who were into wealth preservation, and now they're buying crypto. So for some reason, people's risk tolerance has changed. And I think that's because they're they're interested in making money, and their position now is these things are making money, even if it's irrational. I'll get out before it becomes rational. But in the end, when that swing stops swinging, when that merry-go stops going around, when private equity firm 2 buys the company from private equity firm 1 at a 200% profit in 3 years, and when there's very little growth, when that stops, somebody loses. Before, in 2006, people knew that there were lots of houses being bought at inflated prices and that people were getting liar mortgages, right? That was, I mean, if you were in the business, you knew that. No one said, you know what? If we actually mark all these to market, everybody's insolvent. It didn't happen until it happened.
Yeah, but the new engineered system is set up in a way to hide, you know, the gross deficiencies that were apparent in '06, like banks being, you know, mocked to market on a daily basis with their derivative books and their, you know, credit default swaps and their CMOs. And
Well, let me ask you something.
CLOs.
How do you mark your private equity? The first round was X. The second round was 1/10 of X, but it doubled the price. Is your position now doubled? Where's the rules for that?
Well, think about the.
Let me tell you
accounting.
something. I do securities fraud. That's all I do. Every case of securities fraud I've had, I don't do, you know, 34 cases. I do real fraud cases, has been because of level 3 assets being mismarked and audited. And audited.
So
Aquitas had a
that-
major auditor.
that is what
Their
gives-
receivables were completely mismarked. They
Okay,
lost $600 million when it was all
our
booked.
society has said that that's okay. That's the rules. Those are the rules. That's
What do you mean, our society? You think that average people on the street in Miami set public policy?
whoever.
I told you who sets public policy.
Okay,
Private equity sets public policy.
So private equity, central bankers, heads of accounting boards, right? Everybody hit in the financial realm came together, said, okay, banks can't be hedge funds. They can't engage
That's
in
nonsense.
speculative
Banks
trading.
finance hedge funds.
Correct.
Bank own portions of general partners of hedge funds. Glass-Steagall separated them legally, but they can still invest in them reasonably.
Well, they're lending to them now,
And they're also own parts of the general partner.
but basically they've hidden all these like.
I don't think they're hidden.
Short-term discrepancies that happened in like last March.
The more private assets there are, the more difficult it is to value. You have no idea. Remember the thing with Fidelity marking its private book? There's no way to know what those things are going to be worth. If you own 40% of a company and 3% of it trades at X, what's your 40% worth? It depends on how liquid the market is.
Well, if you got 6 or 12 months to like change the look and feel of things.
No, today you have to market. It's the quarter, you have to market. There's no way.
Well, this
to-
isn't a company that's publicly traded.
I agree.
These are.
There's no
semi-annual,
obvious way to
annual.
mark private assets.
So it's hidden. The fluctuations are hidden. And there's massive amounts of.
When you
leverage.
say hidden, I say inaccurate.
Okay, I say it's more of a shock absorber. It's specifically hidden so that you can, you know, you can hide the losses that happen in the short term.
I don't want to attribute ill motive to everybody in America. I'm just saying it's a difficult thing. Yes, some people will hide it.
It's designed to hide events like.
Let's say I own 30 car dealerships,
March
which are private.
2020. It's designed to.
What's it
hide-
worth?
It's designed to hide things like what happened during the beginning of COVID, right? What was the value of assets in March of 2020? Well, if every bank was publicly traded and involved in all these types of securities and they had to value these securities on a daily basis, there would have been a massive run on the banks. But that's not what we did. We basically said, hey, hedge funds, private equity funds, you guys can hold this stuff. We'll lend to you,
Right.
right?
They,
But
they wanted to avoid a mass sale of assets. So I'm not saying that's bad social policy.
you don't think so?
No,
But I think the problem is much, much huger than it was in '08,
it's much huger. It's
like enormous,
1,000 times huger.
right?
Rivian is worth $95 billion.
So,
Egg companies are worth $2 billion that are in the most competitive business on the face of the earth. You can actually have a chicken farm right over there on the top of that terrace.
so there's not gonna be any event. There's not gonna be any adults. Your question, where are the adults? There's not gonna be an adult.
Well, they're adults. There are lawyers who sue you. There's the Justice
No,
Department.
there's no adults. Everybody's involved in the whole thing together.
People are complicit. I agree.
So if there's no adults, the only events that can happen are like naturally occurring events like COVID. And we even took that catastrophe and turned it into, as what you're saying, one of the greatest minting like press.
Yeah, I'm surprised. Obviously, people died, so we don't want to, make fun of this or belittle their bad experience. And I'm not. As I said, I had COVID, and then I had close people that I died from it. But economically, it was a boom. That's a fact. I hope I'm not the only person to ever say that, because that's the truth. More wealth was created, more billionaires were created, more 500 millionaires were created, more 100 millionaires created than any other time period in my life by far.
So maybe,
And fortunately for them, they got out.
maybe there is a need to venture off into some of these other alternative asset classes. These frontier asset.
I only do alternatives. The only problem with what you're saying is all of the trillions that have been created can't force their way into the funnel of alts. Alts are small. The convertible bond market's not that big. The carbon credit market is not that big. So you can only stuff so much money. Middle market lending, it's getting bigger, but it's still not that big. And the bite sizes are small. So yes, theoretically, and that is happening. I owned a middle market lending situation. I had a couple $1 million out. That was difficult to describe, but was yielding 18%. And the guys who were doing it were not A+ characters. They had both filed for bankruptcy. And I once said to them at a lunch, I'm probably the only person that would finance you in the whole world. They said, well, there's one other guy. And I said, well, that's what I meant. 9 months later, my position got bought out by a large alternative finance corporation on Brickell Avenue at a premium. And when that happened, I said, the whole world's changed, because no one in their right mind, no institution could have put these guys through the paces to make a determination that this was a bona fide investment.